and giving you some good strategies covering pre-approval power. I purposely didn't have any lenders on the call, but I am going to speak very much like a real estate broker and give you guys some good tips and tricks to consider when you're working with a lender and you're getting your clients pre-approved. I think there's a lot of questions out there for new brokers. This is something that if you don't spend some time on this in the next couple months, you're going to struggle in getting sales done and getting them done right. It's going to be a lot harder to work if you're not getting your clients in the pre-approval process. So hopefully tonight you'll leave with some strategies, maybe some questions that you're asking potential lender partners if you're interviewing lender partners. So I'll kind of lead with that tonight, and then also cover a questionnaire that you may find very helpful. So next slide. One of the things that I did when I was first new to the business is I decided to partner with a lender, somebody that was about my age demographic, who had the similar kind of drive and excitement about the process. She was actually licensed as a loan officer back in 2000, and I was licensed as a real estate broker, and I knew I had to partner with a good lender. And I thought by having just one lender partner that would be what I needed to do. And what I found is, yes, that might be true, but actually as a new broker, you need to be open to working with different types of lenders. My clientele were not all the fast moving age demographic. What I found out with my clientele is they needed variety. And so I needed to have at least 2 or 3 lenders that I worked with and that I could refer business. Obviously, if you only had one and you gave all your business to one lender, that lender would have to be a rock star and close that business for you and work at your level. And various things happen in people's lives, just like they do in real estate. Some people they get sick, or maybe they're caring for elderly parents, or in this case, she got too busy and was working another job and was not doing a good job at following up with my clients, the leads that I was giving her. And so there was a setback early on in my real estate career due to a lender partner not doing as good of job at the follow-up as I was doing. So this webinar was really meant to give you guys some things to keep in mind. So one thing I developed early on in my career, if you don't have one, you should have something, what I would call a mini application. We're not lenders. I don't want to be a lender. I have no desire. For those of you who are lenders as well as real estate brokers, kudos to you, because it's very hard to be both. Especially if you're representing them in the same transaction. Washington State allows you to be a lender and a real estate broker. There is a disclosure that has to be signed. The buyer's agency agreement does have a checkbox that indicates whether you're a mortgage broker and a real estate broker in a transaction. Many states don't allow that type of representation, to be a mortgage broker as well as the real estate broker. But in this case, again, I don't want to be a mortgage broker, but I do need to ask some questions. And I think a lot of new brokers get into this business and think, oh my gosh, I don't need to, I'll just let my lender pre-qualify them and go over and ask them all the questions. And I learned very quickly that doesn't serve you well as a broker. You will be able to time manage, especially if you're working with a lot of people and you're conversing about real estate matters. It's okay to ask them basic questions. So I wrote down a few of the things that were on my mini application. Let me look here at my notes. My mini application says, where do they work? I mean, again, we're not asking them, about their credit, their social security number, not going into that much detail. A mini application is basically ask them questions that are rapport building questions that will help you determine whether these people are, they call it in the sales stat, are they ready, willing, and are they able to buy? Do they have the ability to purchase? And a lot of those questions that are ability related answers come because of the mini application that I put together. So one of the questions I asked was, where do they work? Find out what their job is. What does that entail? Are they full-time? Are they part-time? There's nothing wrong with asking that question, especially if you're trying to get to know that person on a personal level. Another question you could ask that would be a mini application question would be, how long have they worked there? If they've only worked there for less than a year, it's okay. My brother worked at a job less than a year. My sister worked at a job less than a year. And the underwriter was able to have her write a letter and understand that she was in school and that there's, things that we have to overcome for an underwriter if it comes where they don't have enough employment history. But you know what? Nothing wrong with asking in the mini application, how long have you worked there? What do you do for your line of work? Those are great questions that are preliminary that should be asked, I think, by the real estate broker to understand the client situation. The other thing I had on the mini application was, what programs have they heard about? What loan programs have they heard about? This is where you can kind of gauge whether this particular client knows much about the loan process. If they say, I don't know, down payment assistance, or my dad said that, you have to have 20% to put down, you really can understand their education when it comes to the loan process by asking, what loan programs have they heard about and what loan programs are they most interested in? If they say, no, I don't know much about the loan programs, then you know how to partner them up. These questions were designed to help me in, like I said at the beginning of the call, help me decide who to partner them up. I had 3 different loan officers, one that was really fast moving, that could get pre-approvals done, that didn't do a good job with follow-up. I had one that was really good at making sure they were the cheapest, the easiest, not that expensive of a loan. And then I had ones that they had to meet in person, they want to go in, very traditional, maybe older type of client who wanted to actually not do things online or fast track anything. They had a lot of questions about their particular credit or their financial position, and they wanted to go in and meet with that person. So I actually had 3 loan officers as a new broker to the business. And I did that purposeful because I had such a bad experience with the one loan officer that I worked with in the first 6 months. And the other question I asked them is, when is the last time that you had your credit checked? And it's interesting to find out, I haven't had it checked in many months or in years. Or, when is the last time they say, I had it checked with this bureau and that bureau? You'll get a sense that they may have had more challenges if they're pulling their credit more frequently, or they're trying to work on some credit repair. That's a great question to ask. When is the last time that they checked your credit? And then you'll know, well, who was that checked your credit? Well, when I went and got my car. Okay, so then we know that they have some more debt. Asking questions about that, there's nothing wrong with asking those questions. If you're starting to take their application as far as, what jobs, where's their addresses, that's more of a full application that a lender should ask. But just, basic questions that would be on an application, there's nothing wrong with asking where they work, who they've talked to about getting their credit checked, or what type of bank or institution that they would be most comfortable looking into. Those are great mini application questions. One of the things that I think is important to remember is that, a mini application or the conversations that I have with the client may be the same conversations that a lender has, but you want to be able to soft transfer that client to the preferred lender as much as possible. It will save you a ton of time in making sure that's done. The client will decide based on your recommendation whether they want to stray from you or stray from the lender. The lender knows real estate brokers, just as many real estate brokers, or as many lenders as I know, that lender knows about that many real estate brokers. So it's got to be a very soft transfer and a working relationship that we have with those lenders, because clients will stray, and they will stray from the agent and they will stray from the lender for these 4 reasons that I have on the screen. Not enough communication throughout the process, the availability. I have lost people and lenders have lost people because they were not available to take questions about that mortgage application or that pre-approval letter that we needed when we started to write the deal. A lack of knowledge regarding the ability to represent them. So maybe for my, I always like to, think about what mistakes I made in my past. And one of the mistakes I made in my early career was that I failed to let that client know that I was able to represent them on any type of property. And what I found is one of the buyers went astray and found another real estate broker and a lender partner that happened to be in the house that they loved. and they thought that I couldn't represent them on that particular property because I did not show that property, which may be true, but there's a lack of knowledge regarding whether I can represent them, whether I have showed the property, or what my duties are as their real estate broker. So make sure that they understand that you have full knowledge about the marketplace, that you have an understanding of the process. Make sure that that's very prevalent at your conversation initially with that buyer. That's a great conversation to have in a buyer consultation, like we've discussed in the past. Understanding their needs and their wants. If you fail to do that, or the lender fails to do that in terms of what products that they would be, would work for them, or not understand what they're trying to do, like should they have a loan for 30 years, or maybe they should only have a loan for 5 years. Not understanding their needs and wants could prevent that client from continuing to stay with that preferred lender, or that lender that you've recommended. So ideally, we'd like to keep it all in-house and make sure that the lender that we are recommending and the agent, obviously you, are able to close the deal and close them efficiently and quickly, and make sure your client gets the best service as well as the best rate. And it takes a lot of work to make that transfer happen. So before I do that, let me see if Shannon's available. Shannon, are you on the call?
Yep, I'm here.
Told you. There we go. I told you I'd role play with you. So I'm going to role play with Shannon so you can hear how it's done. You want to have the partnership made very simply. So you'll listen to what I say, and Shannon will hopefully play along nicely today. We haven't practiced this, and we'll go through it so that you understand what needs to be said when you're in that initial stage. So let's pretend, Shannon, that we've already had a buyer consultation and we're wrapping up, and I'm asking questions related around the approval process, the mini application. So let's say I did the mini application, and we're now at the point where I say, Shannon, who are you working with on your loan? Go ahead, answer the question.
Well, I went to that home buyer class about 6 or 7 months ago. And
Okay.
I can't remember his name, but I know he was the one who taught the class.
Okay. Well, fantastic, Shannon. I'm so glad that you took that step of home ownership and was able to go to a class to educate yourself about that process. If you don't know then the guy's name, do you remember the company that put on the class?
Yeah, it was down off the waterfront down in Tacoma. I think it was Bay Equity.
Okay. Yeah, Bay Equity is a great company. We've done some deals at Best Choice Realty with Bay Equity before. Side note, you guys, you can do that. We've used just about every lender that exists in Washington. So you can say that. And you want to be really, you don't want to downplay it and go, oh, Shannon, why did you do that? You want to be on the same team. You want to have that relationship and keep it very open and fluid. So Shannon, that's fantastic that you already started that process and went to that class. Was there a product that you were most interested in when you were starting that process?
Well, we really need that down payment. I don't think we can even, it's going to be tough itself to even come up with that 1% for earnest money. So I think they talked about some zero down programs.
Okay. So would it be all right if I had somebody, I think it's fantastic that you've started the process with Bay Equity, but would it be all right if I have somebody call you? It's just to get a comparison on the type of loan that is out there. I have another guy, his name is Sam Sentioli, that works at Movement Mortgage, who would be able to give you a good comparison and you can shop the rate and get an understanding of what you could qualify for now that it's been 6 months. Would that be something you would be open to receiving in the next few minutes?
Absolutely. I'm all about saving money.
Okay. So what I'll do is I'll have Sam give you a call. There's no obligation to use him. In fact, I would recommend getting 2 opinions, one from Bay Equity or, your local bank, and then one from Sam so that he can, so you can compare, apples to apples and understand what the rates would be and what you can qualify for now. And then once we get that done, what we can do is then set our parameters for our home search so that we're not showing you things or properties that don't meet your needs. How does that sound?
That sounds like a plan.
Okay, fantastic. Shannon, how did that make you feel when we kind of went down that path?
It gives me options. It shows that I can use my own person, but you're just giving me another comparison where I can at least understand the process and have another person either reiterate the same information so I feel comfortable, or they can at least give me another option that might work better.
So some things that people have told me, Rochelle, what if my lender is not available? You better get a lender that can, when you're making your prospecting calls, you better have a lender that can pick up the phone and have that conversation. Or you text them and say, hey, call this person. This is their situation. It's a hot lead for me. You want to have that type of relationship with your lender, whether it be Sam or somebody else. You can insert some other name if you like. But that is the best way to partner a lender up. You can say that we work with many lenders, but the lender that I have on, deck right now that can call and get you pre-approved is, and then you can list their name. Some people have said, Rochelle, well, I just want to send them an email or send them a text, and then they can call them at their own time. That is a strategy I tried early on in my career, and it's a huge mistake. So if you're thinking, oh, this person is going to go ahead and make that phone call, 90% of the time they're not. And they're not going to take that step, and they're not going to be as assertive and as educated, and they kind of are resistant to making that phone call. I don't know about you, but I hate talking with lenders when I'm buying a car or when I'm buying some major purchase. The thought of having to speak with a lender, sure, I would take their phone call, but to actually be proactive and have them check my credit and do all of the questionnaire, it seems overwhelming, and they won't take that first step. I tried it for about 6 months. I sent them an email and say, hey, you should call this person, this person, this person. And I got 0 to 1 response on hundreds of emails that I sent in reference to potential lenders that the client should talk to. They're going to talk to people when they're in that moment, but they've already got you on the phone, and it's a soft transfer just to ask them to receive a phone call from the lender. Now, if the lender doesn't deliver, shame on the lender for not delivering. You better find another lender that can respond quickly and follow up. Next slide, Jan. I think I beat that one to death. There you go. So we talked about, another thing I want to talk about tonight is the pre-qualified, pre-approved. There's a lot of letters that I'm seeing come through with your offers. And as a listing agent, I see a lot of various companies. Should I go with a bank? Should I go with a mortgage banker? Should I go with a mortgage broker? Should I go with they call themselves all different types of things nowadays. So there's 3 or 4 different types of situations that I'm seeing in terms of the mortgage, where as far as the letters that come in. There's the pre-qualification, which generally means that they just had their credit checked. A pre-approval, which usually means that they've collected documentation, which is better for a mortgage, or what they call an underwritten approval, where they've actually run it through an underwriting system, and they've got kind of an approval, an automated approval to do the loan. So that requires more documentation from the client's vantage point. So if you're on this call and you're a listing agent, you really need to dig into that letter that you get with that offer, making sure that it's as clean and they've collected as much information as possible. And if they haven't, trying to understand initially if you're going to go with that offer, that stuff is going to be collected fairly swiftly. I don't want to see a lender, sit on the file for 2 weeks, 3 weeks, 4 weeks. We have had a few of those. And those are painful to watch you guys go through that process and learn that there's questions that should be asked at the onset rather than waiting until you get under contract to ask those questions. And that goes for a good listing agent as well as a good buyer's agent. You need to have more conversation. I don't want to see these text messages or these types of things. It really needs to be a phone call to understand the client's position and to understand the timelines that are at stake by getting that mortgage. So you really should have that conversation. If you're representing the buyer and they're using, in that role play that I just did, Bay Equity, I've got to know the guy's name, the guy's phone number, and I need to have a conversation about how they structure things and what they are pre-approving. And maybe I get more information out of the lender than I get out of the client, which in this case, this role play is the case. I found out that there's some credit challenges when I talk with the lender, and that I'm going to need more time because of the job history with the type of program that they're going to put this client through. So I wouldn't have known that if I had just texted the lender and said, hey, is this client pre-approved? He'd say no. So the text message doesn't get deep and understand the full picture of what we're dealing with. But a phone conversation with that lender to understand the buyer's position would in fact give me some more indicators as a buyer's agent. How long do I need to structure those showing appointments? If I would have wasted probably 2 months of time showing this client homes if I had not had a conversation with that lender at Bay Equity about the client's situation. The other thing to understand with the buyer is to understand how much they have to put down. In this particular role play, Shannon didn't have a down payment. Ideally, wouldn't it be nice if every buyer has 20% down? There are still people that think they have to have 20% down to qualify for a home purchase, and that's not the case. So you will need to educate them that there are down payment assistance programs, there are grant programs, there are all kinds of programs that might work for this particular borrower or buyer in your case, that they need to have some money to put down, sometimes 2% to 7% to cover loan costs. And if they don't have that, we need to talk about whether we can negotiate that with the seller. And those are challenging, especially in areas where it's a seller's market, or when the market is, there's low inventory and there's not enough homes to satisfy the demand for the properties that are on the market, the buyers that are in the market. The other thing that you should understand is the buyer's income. Is it sufficient to afford a home? I'll use my brother as an example. Ideally, buyers should have, he has quite a bit of debt, and that's what they call the debt to income ratios. You should have roughly 28%. Have I sold properties to people that have 40% of their income goes towards owning, their mortgage? Yes. But ideally, that's a very comfortable number. If 28% of the income was sufficient to afford the home, it went towards their mortgage. The credit history, does your buyer have good credit? By asking them in the mini application, when is the last time they had their credit checked? And they tell you, I've had it checked a dozen times. That's not a good sign. If they've only had it checked maybe once or twice, that's not too bad. If they're pulling credit, that will drag your credit score down. The more credit pulls that happen, it does drag the credit down. So, ask them if they've reviewed their credit and is there some things that they need to clear up. And then we talked about debt already. So those are some things that you should consider. Again, we're not taking a full application, but it's overall best practice for working with the buyer to understand that they're taking out a mortgage and that there is a debt and there's some kind of parameters that may prove challenging, but albeit not, I've sold 0 down, 45% debt to income ratios. I've done those types of loans, and those buyers have been able to stay in their home long enough to pay off some of the debt and actually then be able to turn it and build equity and build a nice nest egg for themselves. But, you don't want to push somebody into a property that really should wait. And in this Bay Equity example, the actual buyer, they needed to be at their home. They just got done paying off a bunch of medical debt. And it wouldn't make sense 2 months ago to buy a home. And if somebody did force them to buy a home, shame on that real estate broker for putting them into a home that they can't afford at this time. It would be better for them to pay a little more in rent for the next 2 months to get them into a good financial picture, and then get them a 0 down loan that they can pay off over 30 years. So we got to work through some of those things, and it's difficult, especially when the prices start to go up and affordability becomes a challenge with 0 down buyers. But there are other loans that we should consider. Let's go to number 4. Thanks, Shannon. Has Sam Santioli's phone number is on this. That's his direct cell phone. He works for Movement Mortgage now. He is a good lender. Some of the things that I ask lenders when I meet with them to decide whether I want to include them in my list of lenders that I want to refer, obviously they should be able to answer all of the questions that I have here on the screen. This is a questionnaire that I told you guys I would provide you with tonight. And it's something that if a lender cannot answer these questions, and what I call rapid fire, meaning I ask these questions and they should have answers and not flinch, then they probably have been in the mortgage industry longer than 20 years, or they have experience to be able to do enough volume that would allow them to help you represent your buyer and really be a good partner. So I highlight a few that I wanted to go over the answers with, but as far as the other questions, right before the call, Sam says, can I be on the call? I said, no, this is a real estate broker only call. I don't want lenders to see what we're covering. But lenders should be able to answer these questions. And I wanted to make sure he could answer all these questions in less than 15 minutes. And he passed with flying colors. So I know that I could refer you to him. If you're a newer broker and you're looking for these answers, he'd be happy to have a little one-on-one conference call with you and get you up to speed on so that you're well prepared with these answers as well. So again, you don't have to know the mortgage process, but you should know some of these answers. And if you don't, you should talk with a good mortgage professional. And it might be a way that you screen through some of those mortgage loan officers that think they know or that put a lot of marketing and money around it, but then they really have no clue about closing a loan. The one I want to cover tonight is what are the 3 main items that are needed to qualify a buyer? That is going to depending on which loan officer and which mortgage company they work with. But Sam answered the question. He said that they actually only need a driver's license, W-2, and then bank statements. He actually doesn't need the tax returns at Movement Mortgage for somebody that has a credit score. Now, that's initial application taken, but that's all that he needs to get somebody pre-approved through Movement Mortgage. So it's not difficult to get a buyer qualified before you go out and tour homes. Although I have toured homes, my first appointment with a buyer, but why go to that step? I would say if you can call somebody like Sam or text Sam and say, hey, can you call this person and get a copy of their driver's license, check their credit, and make sure they have the income to verify the pre-approval amount. What are the 3 programs that offer 100% financing? In Shannon's example, we talked about down payment assistance. Those would be what we would call 100% financing. So that would be down payment assistance, Washington State Housing. Another 0 down or 100% financing would be VA, people that are veterans. Look for some program guidelines to change when it comes to VA. I was in a VA class a couple weeks ago, and there's some really good things for veterans that are coming down the pipe. And then the other one would be USDA. Those would be outline, and you have to fall, the house or the property has to fall within a certain outline area that USDA would finance. Those are the 3 programs that offer 100% financing where they do not need a down payment. The down payment is either rolled into the loan amount or is paid for by the seller in a down payment assistance type of way. Or it's covered by Washington State grants. That type of thing is what 100% financing would really mean. And people don't realize that there's programs out there that they may qualify for. They may not have that type of education in their past, or they may be first generation homeowner. Whatever the situation may be, it's important to know that your lender knows these programs or has the ability to do these types of programs, and that they know what questions to ask and how to supply that information to them. At what point do you address a rebate or a credit with the loan officer? So I get this question a lot because of the way we've structured Best Choice Realty. You shouldn't wait until the week before closing to get that information to the lender who's partnering with you on the deal. You really should get that information. If you're going to offer a credit or a rebate to your borrower or to the buyer, you need to get that information really upon mutual acceptance or when you start to structure your offer, because there could be some challenges that come along with that. You may have asked the seller to contribute closing costs or help with the down payment, and you're not able to also give some closing costs or some help or assistance or a rebate to that buyer. We've had some situations where that has occurred. And unfortunately, RESPA does not allow us to do things off of the closing statement. We have to have everything disclosed. So I'd rather know that at the onset rather than waiting until the week before closing. Some of you are waiting way too long to let that loan officer know that you're doing a rebate towards their closing costs. So as soon as possible would be the answer to that question. What contracts need to be turned into the mortgage loan officer? For those of you who are newer, I never want to see any Best Choice Realty broker sending a Form 17 disclosure or a 35R to a lender That is not their right. They are required to get a purchase and sale, a complete copy of the PSA. So you better slice and dice that PSA if you have the Form 17 attached. And also they don't need a copy of the inspection report. They don't need an inspection report, a 35R, and they do not need a copy of the Form 17. If you have an addendum that talks about credits or it talks about repairs that need to be done, that's part of the contract. The Form 34 needs to be supplied to the mortgage loan officer. They need every addendum. If it was a builder's, they would need to have a copy of the builder's addendum. If it was something that you put on a Form 34, they need to have that. That's part of the contract. But if it's a 35R, they're not required to get that, as well as a Form 17 or any inspection related information that's between the parties. So those are the things that they do not get a copy of. The timeframes, really a good mortgage loan officer should be able to get things done quickly. They should be able to work backwards from the closing date and meet guidelines with appraisal, with their finance contingency, and with the closing date. If you have a lender and they don't close on time, that pretty much for me is a no-go. It's a non-starter. I won't even use that lender. I won't recommend that lender if they cannot meet deadlines. So if I give them a contract and they tell me, Rochelle, I can close this in 30 days, they better be able to close it in 30 days. And if they're not able to, then we need to find a different loan officer. If you're having difficulty with your current lender that you're giving business to, you are missing out on opportunity, and you really need to start looking or hunting for a new loan officer that can meet deadlines, because they are out there. Sam can close quick at his new firm, Movement Mortgage. He can close 7 to 10 days because they work quickly at the onset rather than waiting for a purchase and sale. So there are some quick closing timelines, even with FHA. I always like to give my lender FHA 30 days or a VA 30 days, but Movement Mortgage can close quicker than that on FHA and VA, and they've proven that. The other one is, when do you discuss financing with the prospect? That's a question for the loan officer. I would say, in reference to our call tonight, you definitely want to speak with your lender right away. The sooner you can get that lender in touch with that prospect, or the sooner you can have a conversation with that prospect, the better. Certainly you can go out and show properties. I'm not going to regulate when you go and show properties, but I would say that you'd want to make sure before you go out and show a second time or a third time to a client, you better have them pre-approved or talking with the lender. If it's the lender of their choice, I would hope that by the second appointment that you would have had that conversation with that lender so that you are prepared to write the deal. Because what can happen is what we're going to cover in the last slide. I believe it's on the last slide, Shannon. You can go to the next, is to keep them loyal to you, to make sure the lender gets the credit for the deal and you get credit. You want to provide awesome service. You want to accommodate their schedules and follow up and listen to what they're saying. But a lot of you are writing contracts and you're really jeopardizing the contract because you should have had that conversation with that lender about how much down payment. In the term 1A, it says that that they're making application and that you've really had a conversation. If you put something down there, like they're going to put 5% down, and you have not confirmed that with the lender that they have the amount to put down that they've put into the contract, you jeopardize their position and jeopardize their financial positioning with the contract right off the bat. So I'd want you guys to make sure that they have the resources, that they have the down payment, and that you have had a conversation with that lender at a minimum before you write that first contract for them. Certainly, I would rather see you guys do that sooner rather than later so you don't waste your time. But I understand that building a relationship takes time and you got to be on the same page. I don't have a problem with you double apping. I think that's a very smart thing to do. Just so you kind of understand when you talk with the lender, a lot of lenders, when you ask them, do they have the ability to take on more? Are they too busy or are they not busy enough? It's trying to find that lender that kind of is in that sweet spot. Somebody that's doing $7 million per month or more in lending, perhaps, and again, you could challenge me on this, could be too busy unless they have a team that works really well with them. And somebody that's only doing $1 million a month may not have enough experience to be able to help you with your buyers. and know the right questions to ask. So keep that in mind when you're interviewing lenders, and really you want to understand how they work and what questions they ask when they screen or when they take your client's application. There are all different types of programs out there, and hopefully you can find a lender that you can trust. There are mobile applications and calculators out there. Beware of that. Many of them are not accurate, and many of them require information. The information you would need to provide the mortgage calculator or your client or the lender that they're working with is what is the taxes for the specific property that they're interested in, and what is your client's position, and what's the HOA like. Many things come out of the conversation that you have with the lender, so that the calculation, that the client doesn't get excited about something that they cannot afford. Those calculators can often be misleading, and if they're using them improperly without that other information, you're going to set them up for failure from the get-go. So watch the mobile apps. There are a few that are good out there, but they're few and far between. Make sure that they understand that you have access and you can work with their lender to get that up to date, so that they know what they can afford. Hopefully this was helpful for you guys. I know I'm over my time. If you have questions, you're welcome to stay on a little bit later. Hopefully Shannon answered some of the questions for you. If you want the mini application, just send me a quick email and I'll be happy to provide that. And good luck out there. We'll talk to you next week.